All right, so I want to go over my trades for the week. This is probably my favorite video to make. So weekly profit for last week, total net profit was about $481 US. So these were the trades that I closed last week. So I'm going to go over them one by one. So the first one here you could see is a CRM. See, it says here naked put, but it actually started off as a put spread at 225, 220. So a put credit spread 225, 220 that I opened November 10th. So if I just go quickly on Yahoo Finance and just look at CRM just to see what it was trading at November 10th. So if I go back, I have to at least take 6 months. So November 10th was trading at 247. So it was most likely an earnings play. It's been a while, so this was most likely an earnings play. So November 10 it was trading at 247. I did a put spread at 225, 210, but for some reason I wasn't able to close it, and then at some point it dropped to 220. Now I had rolled it a few times, and my last expiry was this week. It was January 8th. It was supposed to expire January 8th, but it was trading at, if we look at, let's say 5 days, so it was expiring January 8th, but my put credit spread was at 225, 220. So my short strike is 225. So I need CRM to be above 225 for me to win on this trade. Yet CRM this week, so on January 6th, it was trading at 216. So it was below my short strike and was below my long strike. So the put spread was completely breached. So that means that gives me a max loss. And that would mean that I would have to close the trade for $5. And the loss would be the difference between $5 and whatever I collected in credit. So I didn't want to take that loss, of course, because it would have been almost $400. So I took a small risk. I decided on the day where the market ended the day pretty red, like the last 1 hour was just dropping, I decided to close the long put. So the long put, the one that I had bought for protection, I decided to sell it. And therefore, when I sell the long put, when I sell the 220 put, I'm left with the short put on its own. So it becomes a naked put. But when I sold the long put, I collected, I believe it was $5. Yeah, I collected $5. If I go back here, I wrote it here. So yeah, you see this plus 5 here, this is from selling the 220 strike. So when I sold the 220 put, I collected $5. But then I was left with a 225 short strike for January 8th. But what I was counting on, or my assumption is that this would have been the low of the week and then it would come back up, which it did. Because usually most of the time when the market just drops hard or we have a big red day, the next day it's a green day. So that's what I was assuming. And then I got lucky this time. It was a green day. The stock went back up. And as it went up, my short strike, I was able to close it for $5 as well. So when I was able to close it for $5, it gave me a net profit of $1.95 net profit. Why? Because I basically collected $6 of credit and I ended up closing it for $5. So that gave me $95 net credit. Now, CRM or Salesforce ended up closing at 222 January 8th. So if I just held my short put till expiry, I could have closed this trade for $3 instead of $5. So I would have made an extra $200 on this trade net profit. But regardless, I'm just happy I got out of it for a profit, because if I had just kept the put spread as is, I would have closed this trade for $3, but I collected $1, so I would have lost $2. So I would have lost $200 instead of making $95. So pretty happy with this trade. Ended up being profitable. I've got a second line here is a naked put on Sumo 25 strike, collected $1.35, January 15 expiry. I opened January 6. So if we go to Yahoo Finance, look for Sumo, and so January 6th I said was opened. Yeah, I believe it was January 6th. Yeah, January 6th I opened it. So January 6th, you see there was a bit of a red day. So on January 6th, when it dropped, I decided to sell a 25 put. So it's pretty at the money because Sumo was trading at 25.66. And I sold the 25 strike for next week, for January 15. Collected $1.35. And then the next day, if we go back to Yahoo Finance, the next day Sumo jumped to 26.9. So it still jumped enough for me to close it the next day. I didn't have to wait till January 15. So I closed it for 60 cents, and I'm pretty sure now I could have closed it for much less. But regardless, I closed it for 60 cents. So more than 50% profit. And in just one day, held for one day. You could see CRM I held for 58 days. That was annoying. All right, so back to Sumo. So that gives me a net profit of $63 US. And the next trade here, we've got December 29th, Snow put spread at 260, 255. So if we go back to Yahoo Finance, look up Snow, and we said December 29th. I always forget the date. December 29th, yeah. So December 29th, I guess we could do 1 month. Yeah, there we go. December 29th. So Snow was trading at around 301, 300. So Snow was trading almost 380s at some point. Yeah, 384, it dropped, went back up to 350. So when it dropped to 300, to me, it looked like a good time to enter an out of the money put spread. So I sold at this point. When it was at this point, I sold. When it was trading at 300, I sold a 260, 255 for January 22nd, thinking it was a good entry. I collected $1, but then sadly, Snow kept falling after that, 290, and then it even went to 280, and then I even lowered 278. I think at some point it was at 260 or something. Yeah, there you go, 268. So it was only 8 points away from my strike at some point. So it went from 300 to 268. So that kept me worried, but it wasn't out of the money put spread, so I still had room to be wrong and still make money. Luckily, Snow decided to jump back up this week, January 7th, 290, 298, 300, 310, even 319 even. So it really went up. I ended up closing it. I could have closed it for much better, but regardless, I closed it for 45 cents. So almost 50, a little bit more than 50%. So that gives me $42 net profit after commissions on a trade that almost could have been breached. Looked dangerous at some point, but ended up being more than 50% profitable. And now AI. So AI is another put spread I had at 120, 115, which I opened December 28th. So let's go back to Yahoo Finance. AI December, once again I forgot the date, December 28th. All right, so December 28th, we've got AI is trading at 146, but it was trading a bit high. It was trading at 182. So when it dropped to 145, it looked like a good deal. I decided to sell it high. IV was very high, so I decided to sell an out of the money put credit spread. I went to 120, 115, so still 25 points away. The stock kept dropping, and then 139, 137, back a little bit higher, not enough to close. And then look at this, it went to 120, and then this week 115, 114. So this week my put spread was breached. I did nothing. I didn't do anything. I still had time, and because I know it's a volatile stock, I know that it could easily come back up again. So I didn't do anything yet. I just held on to it even if I was completely breached. Because if we go back to my put spread here, it's 120, 115. So I need the stock to stay above 120 for me to win. It was below 115. So it was even below my long put. So it was completely breached. I held on to it. And then luckily, January 7th, it jumped back up to 136. And then January 8th in the 140s again. So time has gone by and the stock is back up. So that means the premiums, the options will decay in value. So what I sold for $1, I was able to buy back for 45 cents. So that gives me another 50% profit on that one. $42 net profit after commission. So it's similar to the Snow trade. And then I've got a ChargePoint or an SBE trade, naked put. So 20 strike, I did 2 contracts on that one. So 20 strike for February 19. I collected $1. I ended up closing it for 50 cents on January 8th. So exactly 10 days held. Instead of waiting all the way to February 19th to collect max profit, I just held it for 10 days. I was able to collect 50% of the profit. So December 29th, let's go to December 29th. I don't think anything special happened on that day for me to get in on SBE, except that it had high IV. So December 29th, okay, so December 28th, it was trading at 43, and then 29, it dropped a little bit. Yeah, so it dropped from 43 to 40, almost 10%. So that encouraged me to get in on a naked put trade. It doesn't take a lot of capital because it's only $40. So from 43 to 40, I went in on a naked put. I did 2 contracts, and I collected, as I said, I collected $1 from that. And then 10 days later, if we go back to the chart, You could see that it came back up again to 40, 41, 42. So January 8th on Friday, I was able to close it for 50 cents. So that gives me a net profit of $87 after commissions. And then Corsair, December 29th, I opened a naked put at 30 strike, collecting $2.85, but I went all the way to February 19. So almost 60 days away. So Corsair, December 29th. Let's look at the charts. CRSR. So December 29th, Corsair was trading at around 35, but December 28th, it was at 38. So it took a big drop between December 28 and December 29. So because of that drop, I sold a naked put out of the money naked put. I went to the 30 strike all the way to February, collected 285. So for me to collect the max profit by February 19, Corsair needs to be above 30. But instead of waiting all the way to February 19, because the stock went back up again, if we go back to the chart, it actually dropped a bit more, but then it came back up. So I was able to close it January 6th, 8 days later. So I actually could have closed it for better if I held on to it a little bit longer, but obviously I don't know that. So this is not exactly 50%, but I felt it was a decent enough profit to close the trade, $108. In fact, it was my biggest individual profit of the week. So $108 net profit, so from 285 to 165. So that was Corsair. Now this one is a good trade. I think this was my favorite trade of the week just because of the entry. So let's look at January 6th, Snowflake. You'll see why I like this trade, because that's the day where Snowflake was trading at around 268. So this is right here. So when Snowflake was trading this low, I couldn't resist. If I got in on a put spread at Snowflake when it was trading at 300, how could I not get in again when it was trading at 268? So I got in into another put spread at Snowflake. So this is my second put spread on Snowflake. Got in January 6th at a 220 strike. Look how far I am, 220. So now I just need Snowflake to stay above 220 I went to the February 19 expiry, so I went pretty far. I just need Snowflake to stay above 220 by February 19, and I keep the full $1 credit. Instead, the next day, January 7th, Snowflake jumped up, as you can see here. Look at this jump from 268 to 290. Because of that jump, I was able to close it the next day for 45 cents. In fact, if I just waited a little bit, I could have closed it for much less. But once again, I don't know that. I couldn't resist. I closed the trade a little bit more than 50% if we ignore commissions. But because of commissions, it only gives me $42 net profit. So that's how I got for this week. That's how I got my $481 net profit US. So pretty happy. I think it's pretty consistent weeks. If we look at my P&L here, let me zoom in pretty far. All right, so you can see, so January shows me 481, December 2500, November 1650, October 593. September was a losing month. I had a week where I lost 1300. So yeah, so September was terrible, but July, August were pretty good. So you can see my average is about from 1,000 to 1,500 per month, which is not bad. But ideally, December was pretty good. If I could do December every month, that would be amazing. I'd be very happy with that. But yeah, so anyways, first week of January, 481. And now I'm left with these trades here. But I'm going to go over these trades in my weekly portfolio update. All right. So if you have any questions, leave in the comment section below. Like always, if you're going to open an account with Questrade to trade on the stock market, use my referral link below to get $50 in free trades. If you enjoyed this video, click the like button, share with a friend, and subscribe to the channel. Thanks for watching.